Good morning, folks. This is Anne Marie, and this is the extended SPY report. This is the short format we have now. So let's just hop into things and see how we look. Please remember that in order to get the precise triggers to enter long, short, and get your stops in place would be from the blog. So you want to do that. All right, what did we see happen yesterday? Here was the base of the gap. The day before, and then yesterday right here we were at the gap, almost filled it, just had a little bit here. We popped up but not into the stop, which is very nice. Where would the stop be? Well, that'd be the top of the gap. All right, 4 days passed, and now we're here. We dropped beneath it. What does this say? Look at what's happened here. We've got a really steep crossover event. We have a large wave that's being retraced. Could be that we end up here at 157.10, though that seems a little unlikely at this juncture. It may very well be that we end up somewhere around 160 or 162, depending on what's going on. I've got some ideas about what's happening in the ES, which is coloring a little bit of what it is that I'm thinking here. But this is a region that we could say is a bit of breakout space. And so if we look to the left, we can see all these regions of support and resistance being broken down. This is a very, very important space in the chart. Not really quite sure that we are going to dip again today, but guess what? That's the thing about trading according to rules. If we break the levels, we take the trade, and there's the next gap that needs to get filled. If indeed we do move to the downside, right? We've got gap after gap after gap that still needs filling. And as we know, nature abhors a vacuum. And so market auctioning is going to more than likely fill us in here. But then you know what? We've got this gap up here to the upside calling us back to the top. Folks, I still see us as essentially bullish. And if we're looking at this wave retracement, let's take a look at that. If we're looking at just this small one, this was the 38.2 retracement that we just had. It just dipped a little bit below that, and now we have 50 and 61.8. 61.8 is a normal retracement event. This is the reason that I am suggesting that we end up somewhere around here before it's all said and done. All right, so trade according to the levels. SMI still showing steep movement to the downside, so there is likelihood that we continue downward there. If we come up past congestion, we know where these positions essentially start. Let me talk about the upside a little bit. We want to make sure that as we move here, if it gets into the 0 point, our SMI, we need to really watch out what's going here from an upside perspective. Top of the gap, interesting place, as well as the gap event here. If we get up into this space and hold, then we'll be off to test the 50, right? Which is all the way up at R3 where all this congestion sits. That's what I'm thinking is going on with SPY. IWM looks much the same. Very steep move over the last few days, right? Slipped into the gap on the 16th, that would be Friday. Held the base of the gap just about. Monday slipped right on through it, and now it is sitting close to the base of the next gap. All right, it's very, very close to that. Pretty likely that we hit that. right? Charts are very steeply sold off, right? And so that gives us a space where we either chatter sideways or take a bounce, and the top of the gap is a pretty important space for us to consider, as well as the fill of the gap. A lot of times people say, you know what, once the gap's been filled, the regions are no longer important. I would disagree with that, because you should never discount anything that you're seeing on the chart. It just needs to be put in perspective. All right, so as we lose this level here, if we lose that, we should slip down into these regions and then into these regions before we do anything else. Now, this was a beautiful ABCD pattern that filled and completed, and so now we'll be looking for the retrace of that event. And if we assume the standard 61.8, we're going to see that we just got there yesterday, almost on the nose. So that's very interesting. I just drew that. Yeah, that's interesting. We could get a 70.7 retrace. That's also an uncommon fib level, but a fib level that has been showing up a lot. So that's what we're looking at. This one looks like it's got bounce action based on that. Let's see what the TF does today. It'll be very, very interesting. But the base of the gap, again, going to be an important space, as well as the fill of that prior gap. So trade accordingly, right? Please trade level to level here and watch your size. If it goes past a region you think it should be triggering an event from, don't chase it and expose yourself to a great deal of risk. Look at the difference between the Qs and the IWM in terms of, let's move that over there, in terms of formation. Now, yesterday's formation, much the same, but the days up to it, a little bit different. And this one did pop up into the region, still didn't, for those of us in the swing longs, excuse me, the swing shorts in the Qs, did not pop up into the resistance region, but is still continuing quite nicely down. Look at where it stopped. This thing's clearly range bound. When it moves, it's going to move sharply. So be cautious right there. Watch for your confirmation candlesticks and realize if it breaks down, because essentially it's in, you know, this will be a fourth day if it ends up in this region. That's a squeeze that's 3-4 days long. It's going to be doing something. So you want to watch for that. This probably is one of the more ideal setups from a squeeze perspective that you might want to have. However, with the flat SMI, this is not sloping like the others. We've got ourselves some differences in there that should make us cautious, right? Here's the flat SMI here. As it remains flat, we realize that this is most likely to pull back down. Flat action like that. So that's what we're looking at. Overall, things look quite negative. But I would surmise that, you know, we should have a little bit of popping action. Could it be into a lower high, just like I suggested with yesterday's formations? Yeah, it could be to a lower high. We are to expect that if we're coming in from a series of highs, lows, lower high, lower low, lower high, lower low, and so on and so forth. We should expect what we're seeing until it doesn't appear anymore, right? Patterns can hold as well as they can, and so that's what we need to be watching for. All right, again, go to the blog levels for the exact postings for triggering long or short, and I'll see you all tomorrow.